Welcome to Trade Finance Talks TV. Here we are once again from ICC Austria at Trade Finance Week. I'm joined by Martina Zimmerl at Raiffeisen Bank. Welcome to Trade Finance Talks.
Thanks for having me, Deepesh.
Well, I should thank you guys for hosting us at a wonderful conference. So, quick introduction. Who are you, where are you from, and what do you do?
Well, I'm from Austria. I'm Martina, head of trade finance. Since 2000 with the bank, I had different steps in the bank, relationship management, commodities, and ventured into trade finance in 2015.
Okay, brilliant. So today we're talking about greener and more sustainable trade finance, which is often a topic a lot of people cover. We're going to focus it on the CEE region, but there's lots to talk about because it's fairly complicated. So let's just start kind of high level. Why is greening trade finance so hard?
Well, that's a difficult one. Maybe let's start how this all began. Yeah? And for Raiffeisen, this began a couple of years ago, where from a strategic perspective, we said we want to contribute to the sustainable environment in our core region, which is CEE. Yeah? And from the top, it started dripping down throughout the whole organization with regulatory department, risk management, loans department took over, and also then product. Yeah? And I've started venturing into this 2-3 years ago, and I started with a goal. I set myself a KPI. Where do I want to be in sustainable trade finance by 2023 and then by 2025? And the first question I was asking myself, okay, but where do I stand? What is my portfolio? Yeah, and then I started thinking, okay, but also what does it mean for the bank, and what is it, and what kind of different green trade finance transactions have we got? And I started building up a team of trade finance experts that, in addition to their normal job, started also venturing into ESG, understanding what it means. Yeah, and if we speak about trade finance transactions, yeah, then the difficulty is in assessing all the parties involved, the supplier, the buyer, the goods, and the transport route. Yeah? And that makes it so difficult. But there are also ways of doing sustainable finance in trade finance that is a little bit easier, and we can speak about that later on. Yeah? But I think the difficulty in trade finance is the complexity of the transactions themselves, the different parties involved, the lack of standards across the globe. We have the EU taxonomy in the EU, yeah, and trade finance is cross-border and is very often with developing countries that may have either different standards or even other priorities still that they have to tackle. And then there is the problem of data. How do I assess a trade finance transactions when I have limited access to data? For instance, how does the supplier produce the goods and how does he ship them?
Yeah, that's interesting. So data, well, lack of data standards and fairly complex in terms of nature. I guess I'll pick up on the bit you mentioned about EU taxonomy. What is the EU taxonomy for sustainable activities, and are trade finance transactions complying with these?
Yeah. So I think first of all we need to clarify what is the EU taxonomy in general. Yeah. And in general, to put it in very easy terms, it's a framework that supports the transformation of the EU economy to meet the European Green Deal objectives, such as climate change mitigation or transition towards a circular economy. These would be two of them, yeah? And the transactions must be both taxonomy eligible and EU taxonomy aligned. So what does that mean? Let's take, for instance, the importation of a photovoltaic panel. That is per se, because a photovoltaic panel per se is EU taxonomy eligible. But the question now is, how was it produced, under which labor conditions, and did it do any other harms with respect to the raw materials that are needed to produce this photovoltaic panel? And if we can tick off all these boxes and we can say, yes, labor conditions were in order and also the sourcing was in order, then it is also EU taxonomy aligned. And now I ask you, how do we get all that data? And that's why it's so difficult to have really EU taxonomy eligible and aligned transaction in the trade finance portfolio. And if I speak about my portfolio, because now I know what my portfolio is after having done quite a few steps ahead, I can tell you that I have quite a lot of EU taxonomy eligible transactions, but only a few that I can classify also to be EU taxonomy aligned.
So eligibility and alignment are probably the two key areas there. And what's RBI doing as a wider group? Because I think it falls far beyond just trade finance alone.
Exactly.
And how can we apply some of their green standards and various sustainability principles to our businesses, the trade finance businesses?
Yeah. So what are we doing as a wider group? And as said, our mission is to help corporates, but also institutional clients in our core region to embrace a more sustainable way of producing, and then on the banking side to support their customers. Yeah, and for that reason, we have created a department called Sustainable Finance. It's not in risk, it's not in regulatory, it's on the corporate product side that supports all the products in its sustainable product offering. And these are also the guys that have supported me in developing the trade finance sustainable offering. Yeah. So that's one point. As I mentioned, down from the strategy, it came into the overall organization, and as said, on the risk area and on the product area and on the obviously sales area. As of today, we are the largest green bond issuer in Austria. We are committed to the UN principles of responsible banking and have subscribed to them. We are committed to the science-based targets in order to prevent greenwashing. And we are the first bank in Austria to offer an ESG incentivation program also for trade finance. Yeah?
Interesting. Well, I was actually going to come on to that, incentivization versus decentivizing on sustainably linked trade lanes or guarantees. What are your thoughts on that entire principle?
I think you must differentiate between the internal incentivation, and the one that you are granting to a client. And in my view, both of them are equally important. What we have done is to implement last year across the loan products, but also the trade finance products, all of them, even the contingencies, and internal incentivation. What does this mean? It means that we are giving an internal incentive, meaning taking some basis points from conventional or brown transactions that we make more expensive in our internal calculations, and transferring this to green or social transactions. And this is something we are doing in anticipation of regulatory cost that will come from the regulator sooner or later. I'm sure about that. And in order to drive also the relationship managers and product sales to go more for the sustainable transaction and start discussing this with the clients. So this is the internal incentivation that aims at anticipating the capital cost that will come for brown transactions in any case, and also to turn the portfolio. And then there is the external incentivation towards the client that however, must always be linked with a certain target. For instance, KPIs that the client has to fulfill. We are particularly in trade finance doing quite a lot with respect to offering on the corporate side KPI-linked facilities. And here we may grant an incentivation to the client if he fulfills certain KPIs, and we may ask him to pay something if these KPIs are not fulfilled. And then we don't take whatever he has to pay as a malus into our own pockets, but we donate this to the Herbert Steppisch CEE charity in order to again return the benefits, even if this is coming out of a non-fulfillment of KPIs from our corporate clients to the region.
Interesting, and I think differentiating those internal versus external targets.
Both of them are equally important, because the one that we are granting to the client, where we are agreeing jointly with Sustainable Finance Department on KPIs that obviously need to be tough, they aim at changing on a mid to long term the behavior of the client. As said, in trade finance, as we have discussed before, it's super difficult to make sure that transactions are EU taxonomy eligible and aligned. Yeah? And that's why, particularly on the large corporate side, but this will be coming also a topic for the mid-caps. We are offering these KPI-linked guarantee facilities or import LC facilities where we really can drive the behavior of the client towards a more sustainable production.
Can you give any examples of a KPI-linked transaction or an import LC transaction?
And that's exactly the point. It's not a transaction, it's a facility.
Fine.
Yeah, it's a facility that we offer, for instance, for a client, and I think I can say that, like Primetals. It's a manufacturer of equipment for the mining industry. And here we have defined, jointly with Sustainable Finance Department, first of all, KPIs that go into the direction of CO2 emissions of this very client. And also of the scope 3 CO2 emissions, and for instance KPIs that aim at, for instance, it's the cost of innovation that this client has with respect to CO2 reduction projects. These could be 2 KPIs, and if these KPIs are being fulfilled, then a very, very small incentivization on the margin is being granted. If the KPI is not fulfilled, as said, a donation must be made to our Herbert Steppich CEE charity. Yeah,
very, very interesting. And it sounds like you guys are pretty ahead of the game when it comes to implementing many of these principles and taxonomies into daily business. But I think the industry is still lagging, and there's still a long way to go. And also we've got to be mindful that many economies are in that transition phase where they rely currently on brown fossil fuels or brown goods.
But as said, sorry if I interrupt you here,
No.
the KPI linked facilities you can even do theoretically for brown industries in order to help them in their transition.
So final question, what do you think is next for sustainable trade finance as an industry, and what needs to kind of happen to move the dial? Big question.
Well, I think one point is this KPI linked facilities I mentioned, but obviously I would love to do more transactions, real transactions and not facilities, that are both eligible and aligned. And I think here the ICC is playing a great role with their initiative of developing ICC standards for sustainable trade and trade finance. And I know that POCs, for instance, in the textile industry is running. And maybe with this approach, namely going for already existing certifications, this topic of us having to go just by the EU standards, or there are also other standards out there like the ICMA Green Bond Principles, but I think ICC is really looking forward to have an industry-specific approach. I think by that, we can then also approach our sustainable finance colleagues and say, look, there is something out there that actually caters the needs of the trade finance industries. And I would love to have that happen. The second I mentioned already is the regulatory topic. I think the regulators should embrace what Raiffeisen is already doing, namely this topic of making brown transactions more costly by increasing the cost of capital for brown or conventional transactions. And the third point is the awareness on the client side. As mentioned by you, maybe the large corporates and the multinationals are already there. We are trying hard also to make our medium-sized clients aware of that, and also our clients in CEE. But on the awareness side, I think a lot needs to be done. And here also Raiffeisen with Sustainable Finance Department having advisory services both for the corporate clients, but also the institutional clients in the region is doing, I think, a quite important job.
Yeah, very, very important indeed, and that's why we have you here on Trade Finance Talks TV. Martina, thank you very much joining us from Vienna. Take care.
Thanks for having me.